The SEC versus Coinbase lawsuit has finally been concluded, and Coinbase request to dismiss has been heard. Notably, yesterday saw the appearance of attorneys for both parties before New York District Judge Catherine Pell to present their cases for dismissal or continuation of the litigation regarding the background in June of the charges of securities law violations against Coinbase. The XRP community is eager to read the emails between the parties regarding the decision to list or delist XRP, as many cryptocurrency analysts are speculating that the lawsuit could proceed to discovery. Coinbase lists 13 digital assets, none of which the SEC claims are registered securities. The exchange's staking function was also deemed a security by the regulator. Coinbase is requesting that the court reject the case, arguing that the assets displayed on its trading platform are not securities because users do not trade underlying investment contracts. Main questions were mentioned once more in the San Francisco-based exchange. Following the conclusion of yesterday's hearing, Coinbase Chief Legal Officer Paul Grewal responded by taking to the XR platform, expressing optimism about the firm's case and saying they were ready for Congress to step in and establish regulations for the cryptocurrency industry. This statement adheres to the doctrine that states the SEC needs approval from Congress before it can regulate an innovative industry like cryptocurrency. Renowned legal scholar James Murphy noted that neither side delivered a fatal blow during the session. Murphy has been closely following the Coinbase litigation, and he claims that Judge F's knowledge and experience were evident during the 5-hour session. The legal expert claims that the judge's command of the subject matter is demonstrated by the 14 pages of questions she prepared for the hearing. The parties' disagreements over the rulings by Judges Jed Rakoff and Alyssa Torres, respectively, were predictable. It should be noted that the judge district includes both judges. It is anticipated that Vic will resign following a significant finding in several leaks that revealed Vitalik, the creator of Ethereum, conspired to pay off the U.S. Securities and Exchange Commission to deadlist and label XRP as a security. This statement comes after the actual XRP investment made by the Gardner family was revealed in an anonymous article in the time of the unintentional email breaches between the founder and CEO of the Ethereum Foundation. And SEC chairman corresponds with Ford's alleged prediction that the value of XRP will be close to or greater than $660,000. This has been immediately verified by Bing and Google. The Russian-Canadian Vitalik Buterin is currently running Ethereum, and William Henman said in a 2018 lecture that Ethereum was not secure at the time. It was Buterin who came up with the idea and registered it as a hybrid platform for software development and decentralized systems. The idea for the Ethereum Foundation originated from the Rumble case, which I believe had to have a beginning. Mining before making an investment decision, Jake Clinton, the chairman of the Securities and Exchange Commission, met with a group of associates he had put together to form the Ethereum Investor Group. This was a crucial step. This group decided to proceed after carefully researching XRP and Ethereum in a communication sent a few weeks after a few days. One of the few survivors, Keith Parkinson, quotes Bill Heyman as one of the sources. Without a doubt, Brad Garlinghouse describes how Ripple intends to replace SWIFT with its digital currency. The SEC received a memo from the Ethereum Foundation asking for an urgent confidential interpretation of Ripple and XRP in addition to possible actions. Although not everyone agreed with the man's claim that XRP is sufficiently decentralized to not be regarded as a security. This pronouncement gained popularity because of its improved efficiency, lower cost, and decentralized nature. The most absurd aspect is that, unlike in November, the SEC had never publicly stated that this was not a security view before the labs decided to meet with the commissioner. The SEC and all of Rosen's commissioners, Bill Henman, made it clear that the speech was intended for Ethereum and included market guidance. Nancy, who was present at the secret meeting with the SEC, disagreed further and brought up the point that try XRP isn't security as it's far less centralized than Ethereum. Mr. Garlinghouse was informed by Roseman that P is not a security. Sadly, that was the final straw. Following private discussions between Ethereum and the CC, the term RAI was first used in public in January 2020 during a roundtable discussion regarding the central bank's toolkit for regulating digital currencies at an international economic summit. The case was filed late in 2020. And the news of the SEC's lawsuit against Ripple Labs for promising to delay this action if the business chose to halt any further communication concerning the digital asset broke in January 2020. The lawsuit went on after Ripple rejected the file, which was a little late. Recently, Ripple's chief legal officer stated that the business rejected a settlement offer, signaling a dramatic change in another whales. The act of dumping 25 million XRP to Bitstamp may have caused the price of the cryptocurrency Ripple ABS to drop even further in comparison to Ethereum. After the latest sale of 4,634 million XRP, Ripple has reached its peak interest in this audacious move. That's all for now. Sentiment, a well-known on-chain data source, recently disclosed useful data revealing that important cryptocurrencies, specifically Bitcoin, Ethereum, and XRP Ledger, are currently experiencing historically elevated levels of profit risk. All of these cryptocurrencies are currently experiencing this risk. This information provides investors and aficionados of cryptocurrencies with useful insights, providing a glimpse into potential trends and alterations in the dynamics of the market. The findings of Sentiment indicate that Bitcoin, Ethereum, and XRP Ledger have all experienced an increase in their respective earnings, which have reached 83, 84, and 80 win respectively. These percentages are significantly higher than the historical averages, which normally fall around between 55 and 75%, and maybe trace back to 2018. Although these percentages can appear to be encouraging, it is essential to have a thorough understanding of the circumstances that surround them. Cryptocurrencies are notorious for their high degree of volatility, and the degree to which they generate profits can be affected by a wide range of factors, including the emotion of the market, the improvements in regulatory policies, and the advancements in technology. Even though the risk levels are currently at a heightened level, the cryptocurrency market continues to be dynamic and prone to rapid adjustments. You may also be interested in whales transferring over $780 in Bitcoin, Ethereum, Dodge, and XRP, a positive prognosis regarding exchange-traded funds and rising exposure. The analysis suggests that there is still room for expansion in the cryptocurrency market, particularly in light of increased exposure from exchange-traded funds and good developments in the news. There's been a significant increase in the amount of interest shown by institutional investors in the cryptocurrency market, and the introduction of exchange-traded funds has the potential to increase the space's credibility and stability. Important indicator for growth over the long term, even though it is difficult to forecast the movements of the market in the short term. Sentiment presents an intriguing signal that should be monitored for the possibility of growth in the long term. If Bitcoin, Ethereum, and XRP Ledger all see a breach below 75 of their earnings, this may be an indication of a shift in the dynamics of the market. To determine whether or not their levels of profitability can be maintained over time, this threshold serves as a benchmark. The sales pressure on Bitcoin and the inflows of ETFs despite the positive prognosis. Bitcoin has recently been subjected to severe selling pressure, which has resulted in a loss of 7% over the past week. During the same period, Bitcoin exchange-traded funds, SCTFs, experienced healthy inflows, which stands in stark contrast to this drop. Although there has been a significant increase in institutional interest, there has been no significant price movement, which has led to questions about the current health of the market and the impact of external forces on the value of Bitcoin.